Bitcoin is often misunderstood, dismissed as a speculative asset or a passing trend. But those who take the time to understand it realize that it represents something much bigger, a fundamental shift in how money works. It is more than just a digital currency. It is a revolutionary technology that challenges traditional financial systems and offers an alternative to centralized banking. The world of Bitcoin can be intimidating at first, filled with technical jargon, volatility, and skepticism. But at its core, Bitcoin is based on simple principles: scarcity, decentralization, and trust through mathematics rather than institutions. This book unpacks Bitcoin in a way that is accessible to everyone, from the curious beginner to the seasoned investor. It explores why Bitcoin was created, how it works, why it has value, and what its future might look like. It traces its origins back to the 2008 financial crisis, when trust in banks and governments was at an all-time low. It explains how a mysterious figure named Satoshi Nakamoto introduced a new kind of money that didn't require intermediaries, operated on an open and secure network, and gave individuals full control over their wealth. The story of Bitcoin is one of resilience, controversy, and innovation, one that continues to unfold as more people begin to recognize its significance. The book is structured to guide the reader through the key aspects of Bitcoin step by step. It begins by breaking down the problems with traditional money and why the world needed a new financial system. It then explains the fundamental mechanics of Bitcoin, how transactions work, what mining is, and why decentralization matters. The discussion then moves toward Bitcoin's role as an investment, its potential risks, and how it fits into a diversified portfolio. Finally, it explores the future of Bitcoin, the challenges it faces, and the potential impact it could have on global finance. Traditional money has been the foundation of economies for centuries, but few people stop to question how it really works. Most of the money in circulation today isn't backed by gold or any tangible asset. It is simply a promise from governments and central banks. This system relies on trust. Trust that governments will not print excessive amounts of money, that banks will safeguard deposits, and that inflation will remain under control. But history has shown that this trust is often misplaced. Recessions, banking failures, and government interventions have repeatedly demonstrated the fragility of the current financial system. The 2008 financial crisis was a wake-up call for many. It exposed deep flaws in the banking industry, where reckless lending and risky financial products led to a global economic collapse. Governments responded by bailing out large financial institutions, printing more money, and cutting interest rates to stimulate growth. But these measures only reinforced a system where power was concentrated in the hands of a few, and ordinary people were left vulnerable to economic instability. It was in this environment of financial distrust that Bitcoin emerged as an alternative, one that didn't rely on banks or governments to function. Bitcoin was designed as a decentralized form of money, one that couldn't be controlled or manipulated by any single entity. Unlike traditional currencies, which can be printed at will, Bitcoin has a fixed supply of 21 million coins. This scarcity makes it similar to gold, which has long been valued for its limited supply. But Bitcoin also offers something that gold doesn't: portability, divisibility, and the ability to be transferred instantly across the world without intermediaries. These characteristics give it the potential to be a global store of value, immune to inflation and political interference. At the heart of Bitcoin is blockchain technology, a distributed ledger that records all transactions in a secure and transparent way. Instead of relying on a central authority to verify transactions, Bitcoin's network is maintained by thousands of independent nodes around the world. Transactions are grouped into blocks, which are then confirmed through a process called mining. Miners use computational power to solve complex mathematical puzzles, securing the network and preventing fraud. This system ensures that no single party can alter transaction history or create counterfeit Bitcoin. Understanding why Bitcoin matters requires looking beyond price speculation. Many critics dismiss it as a volatile asset or a tool for criminals, but its true value lies in its ability to provide financial freedom. In countries with unstable currencies and restrictive banking systems, Bitcoin offers people a way to store their wealth and make transactions without government interference. Even in developed nations, it serves as a hedge against inflation and a way to opt out of the traditional financial system. The journey of Bitcoin from an obscure experiment to a trillion-dollar asset has been marked by resistance and controversy. Governments have tried to regulate it, traditional banks have dismissed it, and skeptics have repeatedly declared it dead. Yet it has continued to grow, attracting institutional investors, corporations, and everyday users who see its potential. The rise of Bitcoin isn't just about money, it represents a broader shift toward decentralization, transparency, and individual sovereignty. Bitcoin's impact extends beyond just being an alternative currency. It is reshaping the way people think about money, trust, and financial independence. One of the most revolutionary aspects of Bitcoin is that it eliminates the need for intermediaries. Traditional financial systems rely on banks, payment processors, and other third parties to facilitate transactions. These intermediaries not only slow down the process, but also introduce fees, restrictions, and the risk of censorship. Bitcoin changes this dynamic entirely by allowing peer-to-peer transactions without requiring permission from any central authority. Bitcoin's rise has also led to the emergence of an entire ecosystem of innovations. The Lightning Network, for example, is a second-layer solution designed to make Bitcoin transactions faster and cheaper. By enabling instant micropayments, it enhances Bitcoin's usability as a day-to-day currency rather than just a long-term store of value. Additionally, major financial institutions and companies are increasingly incorporating Bitcoin into their business models, whether through investment funds, payment services, or blockchain-based applications. Bitcoin's most revolutionary feature is its ability to empower individuals financially. Historically, nations have used their power over currency to influence economic policy, fund wars, and even manipulate public behavior. By offering an alternative that operates outside the reach of any government, Bitcoin presents a dilemma for policymakers. Some countries have embraced it, integrating Bitcoin into their financial systems, while others have sought to ban or heavily regulate its use. The debate over Bitcoin's legitimacy and role in the global economy continues, with governments weighing the risks and benefits of an uncontrolled, decentralized financial system. Unlike traditional banking systems that require identification, credit history, and permission to access financial services, Bitcoin is open to anyone with an internet connection. This is particularly significant for the billions of people around the world who are unbanked or underbanked, lacking access to traditional financial institutions. Bitcoin provides a way for them to store and transfer wealth without relying on banks or governments that may be unstable or corrupt. This aspect of Bitcoin has made it especially appealing in regions with failing economies and oppressive regimes. Another critical aspect of Bitcoin's future is how it will interact with central bank digital currencies, CBDCs. Governments around the world are developing their own digital currencies, which will operate on centralized, government-controlled ledgers. While CBDCs promise efficiency and better monetary control, they contrast sharply with Bitcoin's core principles of decentralization and financial autonomy. As CBDCs become more prevalent, people may face a choice between state-controlled digital money and Bitcoin's permissionless financial system. This dynamic could shape the future of monetary policy and the broader financial landscape in ways that are difficult to predict. Beyond financial inclusion, Bitcoin is fundamentally changing how people think about saving and investing. In a world where inflation constantly erodes the value of traditional currencies, Bitcoin offers an alternative that is deflationary by design. With only 21 million Bitcoins ever to be created, its scarcity gives it an advantage over fiat currencies, which can be printed indefinitely by central banks. This fixed supply creates a new paradigm where individuals can store wealth in an asset that is immune to political interference or economic mismanagement. As more people recognize this property, Bitcoin is increasingly being adopted as digital gold, a hedge against inflation and an alternative to traditional safe haven assets. While Bitcoin may never fully replace national currencies, its growing role in the global economy is undeniable. From large institutional investors to small businesses accepting Bitcoin payments, its adoption continues to expand. With innovation continuing to shape Bitcoin's ecosystem, advancements such as the Lightning Network are addressing some of its early limitations, making transactions faster and cheaper. More businesses, from retail to real estate, are integrating Bitcoin into their operations, allowing it to function not just as a store of value, but also as a medium of exchange. As Bitcoin matures, it is likely to become an even more significant part of the financial landscape, challenging conventional economic models and redefining how people interact with money. Despite increasing institutional acceptance, Bitcoin remains fundamentally different from traditional financial assets. Unlike stocks or bonds, Bitcoin does not generate dividends, interest, or cash flow. Its value is derived from its scarcity, decentralization, and the growing belief that it represents the future of money. This makes it a unique asset class, one that behaves differently from anything the financial world has seen before. Governments and regulatory bodies have struggled to classify Bitcoin, with debates over whether it should be treated as a currency, commodity, or security. The lack of a clear framework has led to varying regulations across different jurisdictions, influencing Bitcoin's adoption at different rates worldwide. One of the biggest concerns for Bitcoin is volatility. Unlike traditional assets, Bitcoin's price can experience dramatic fluctuations in short periods. This volatility has led some to view it as a speculative asset rather than a stable store of value. However, supporters argue that this volatility is a feature, not a flaw. As Bitcoin adoption increases and more people recognize its value, market stability is expected to improve. It's worth noting that gold also experienced volatility in its early history before being widely accepted as a reliable store of value. Security is another fundamental aspect of Bitcoin. Because it operates on a decentralized network, it is protected from traditional financial risks like bank failures, government seizures, or hyperinflation. However, users must take responsibility for securing their own Bitcoin. Unlike traditional banks that can reset passwords or reverse fraudulent transactions, Bitcoin transactions are final and irreversible. This means that storing Bitcoin safely requires knowledge of private keys, hardware wallets, and best practices to avoid hacks or loss. Education in this area is crucial for anyone looking to adopt Bitcoin as part of their financial strategy. Bitcoin also faces regulatory challenges. Governments around the world have reacted differently to its rise, some embracing it as an innovative financial technology, while others attempt to restrict or ban its use. Concerns over money laundering, tax evasion, and financial stability have led to increased scrutiny. However, as more institutions and individuals adopt Bitcoin, regulatory frameworks are evolving to integrate it into the existing financial system rather than eliminate it. Another primary criticism is its energy consumption. The process of mining, which secures the Bitcoin network, requires significant computational power, leading to concerns about its environmental impact. However, as the industry evolves, many mining operations are transitioning to renewable energy sources, turning Bitcoin into a driver for innovation in sustainable energy. Some argue that Bitcoin's energy use is justified by the financial freedom it provides, comparing it to the energy consumption of traditional banking and gold mining, both of which also have substantial environmental footprints. Despite these challenges, Bitcoin's underlying principles continue to attract believers who see it as a hedge against inflation, a tool for financial independence, and a means of preserving wealth in an uncertain world. As trust in traditional financial institutions erodes due to economic crises, bank failures, and monetary policies that devalue national currencies, more people are turning to Bitcoin as a safeguard. Large corporations, hedge funds, and even governments have begun holding Bitcoin as part of their reserves, further solidifying its status as a legitimate asset. The conversation around Bitcoin's future is still unfolding. Some envision a world where Bitcoin becomes a dominant global currency, used for everyday transactions. Others believe it will remain primarily a store of value, functioning similarly to digital gold. Regardless of its ultimate role, Bitcoin has already achieved something remarkable. It has introduced the world to a new way of thinking about money, trust, and financial sovereignty. Regardless of how Bitcoin's role evolves, it has already left an indelible mark on history. It has challenged long-standing assumptions about money, ownership, and trust in centralized institutions. Whether it becomes a universal currency, remains a store of value, or paves the way for other decentralized innovations, Bitcoin has undeniably changed the way people think about financial sovereignty. In conclusion, Bitcoin's journey from an obscure digital experiment to a global financial phenomenon has been nothing short of extraordinary. It has defied skeptics, weathered volatility, and forced the world to reconsider the very nature of money. What began as a decentralized alternative to traditional finance has now embedded itself into mainstream discussions about economic sovereignty, wealth preservation, and technological progress. While many still see it as a speculative asset, others view it as a hedge against inflation, a digital form of gold, and even a revolutionary tool for financial freedom. Its resilience is perhaps its most defining feature. Despite cycles of boom and bust, regulatory challenges, and technological hurdles, Bitcoin has continued to grow, drawing in believers from all walks of life. Institutional investors, governments, and individuals alike recognize its potential to reshape the global financial landscape, yet its future remains uncertain. Will it become a widely accepted medium of exchange, or will it remain a digital store of value? Will regulatory bodies find a way to control it, or will its decentralized nature prevail? These questions will unfold over time, but one thing is clear: Bitcoin is here to stay. Whether one chooses to invest in it, study it, or simply observe its evolution, ignoring Bitcoin is no longer an option. Its impact on finance, technology, and global economic policies is profound and ongoing. The world is shifting toward a more digital and decentralized future, and Bitcoin stands at the center of that transformation. Those who understand it today may find themselves ahead of the curve, ready to navigate the financial world of tomorrow. Thank you so much for listening and joining us. If you enjoy the audiobook, don't forget to like, subscribe, and hit the notification bell to stay updated with more book summaries that can expand your mind. Drop a comment below to let us know which book you like us to explore next. We look forward to bringing you more valuable contents right here on Page by Page. Until next time, keep learning and growing.